Hi everyone, let's take a moment and work through just a couple parts of this liability problem. Okay, so you see the problem stated here. We've got the following transactions apply to Ozark sales for 2018. And I want to focus on number 3 in this brief demonstration. So what does number 3 says? Well, what does it say? Well, it says we sold equipment for $197,500 cash, not including sales tax. Sales tax is 6%, and it was collected when the merchandise is sold, and the merchandise had a cost of $122,500. Okay, so if we're using the horizontal statements model to determine what the impact is on the various financial statements, we've got to figure out what happened. All right, well, the easiest thing to do, I think, is to record the sales first. We had revenues of $197,500, so that would increase revenues. Now, by now you know that the income statement flows to stockholders' equity in a corporation. It increases retained earnings. So retained earnings would also be increased by $197,500. But we also need to know about the sales tax payable in the cash. So I did the calculation down here. There's our $197,500 of the sales amount. If we take that number and multiply it by 6%, you come up with the sales tax, which is $11,850. Now that increases the sales tax liability at the point we record the sale. Right? So we sold the equipment. We record the liability. Now it says we sold the equipment for cash, so we had to collect the $197,000 plus the $11,850 of sales tax. So if I just add those two numbers together, I get $209,350, and the $209,350 goes right here. And by the way, I should probably slide this just a little bit so you can see that my numbers at the bottom and where I did that. Okay, so there's the $197,000. There's where I take the $197,500 times 6%, right? Now I say $197,000, I meant $197,500. Add the two together. And that gives us the amount that we increase cash. So once we record those in the proper areas, the debits will equal the credits. The accounting equation stays in balance. The accounting equation is assets equal liabilities plus stockholders' equity. Now, over on the statement of cash flows, we have to impact what happened. Well, remember that anything in the statement of cash flows has to have an impact on cash. So we had a $209,350 increase, and that's an operating activity. It's an operating activity because virtually everything that flows through the income statement is operations, right? If we had an increase or a decrease in long-term assets, cash impacting long-term assets, that would be an investing activity. And if typically long-term liabilities or anything in equity other than the change in retained earnings from net income, that would impact a financing activity. Okay, so I just wanted to walk through that. Now, the second part of this is that it had a cost of $122,500. So since we're always matching expenses to the revenues at the time we record the revenues, or certainly within the period in which the revenues are recorded, we've got to show cost of goods sold. So we increase our expenses for $122,500. Well, what's the offset when we record cost of goods sold? Well, it's a decrease in inventory, right? At the point we have a sale, we legally don't own the inventory, so we've got to reduce inventory, show the increase in cost of goods sold. Okay, so that has an impact of net income, negative impact of $122,500. The $197,500, the sales had a positive impact. Now the net of the two is the margin. It's going to make its way to the income statement. Okay, and we think of margin as another word for net income in this regard. It's what you actually earned on it. That's part B, and the reason why we have an NA on this one is that the cash account wasn't impacted at all. Okay, now I also left some balances down here to help you work through these transactions if by chance the problem you receive was the same numbers as the ones I have. If the numbers you receive on anything graded are different, well, you could work through all of these to see if you come up with those amounts as well. Okay, so that's just a brief presentation to help you work through this liability problem. Thank you.